Hi, today I was on the Wall Street Silver podcast. I hope you enjoy. Please take a watch.
So much has developed since the last time you've been on this channel with precious metals, with the markets, the uncertainty, silver, gold. First, though, I want to start off. Of course, we are a precious metals channel, an investment channel. So, what are your thoughts right now in the movements in silver specifically?
Yeah, it's interesting the movement there. So really with precious metals, I mean there's a couple of ideas behind why price is running up so much. One is specifically gold is obviously considered a safe haven. And so when we have geopolitical risks, dollar devaluation and so on, investors are going to flock to those safe havens. Silver, on the other hand, is interesting because there's a combination of factors happening there. One is I think part of it may be that flight to quality with geopolitical uncertainty, but also the fact that silver is used in so much industrial production, specifically around solar panels and AI and technology and infrastructure. And so the demand is going to be super high.
Right.
One thing that I'm not as familiar with, and I'd have to lean on you and your viewers, is what I've been reading is that the supply of silver versus where it's being transacted at there. So there's a supply demand dynamic there as well.
Yeah, absolutely. And that's been a huge thing that a lot of people have been noticing recently is, a lot of the silver is moving from the West, from the COMEX vaults and moving to China. And you have a distortion from the paper markets to the physical silver prices. In the paper markets, you have silver priced at 95, $96 US. But in the physical markets in the Shanghai exchange, it's like $106, $107. So there's a big spread between physical and paper. Are you noticing right now anything that's worrying you in the financial markets, like in the stock market, the Nasdaq, S&P 500? Is there anything that's concerning you right now?
Probably the biggest thing is headline risk. I mean, today we had some economic numbers that came out that were pretty positive overall. GDP was revised up to 4.4%. So we've got solid economic growth. Inflation still remains persistent. The Federal Reserve's preferred measure of inflation is called core PCE, or personal consumption expenditure.
Hmm.
And that's the measure that they're targeting at 2%, and it's still at 2.8%. So that last mile of bringing the inflation rate down to 2% seems to be a little bit difficult. But overall, the labor markets seem to be hanging in there. So out of the big three metrics that the Fed follows, which is unemployment, GDP, and inflation, we seem to be on relatively solid footing. As that translates down into the market, specifically the equity markets, we're seeing a lot of reaction to headline risk, whether it's what happened in Venezuela, Greenland, the proposed tariffs on European countries. We can't forget that there's still a war being fought between Ukraine and Russia. So a lot of that is causing a lot of the volatility that we're seeing in the markets. So I would expect going forward, at least in the near term, that when we have these uh, headlines that come out that will have sort of a knee-jerk reaction. And I want to just caution investors to just hang in there because as we've seen with this whole Greenland debacle,
Hmm.
on one hand, we ramp up the geopolitical uncertainty and then some agreements are made and now everything seems to calm down and we can get back to fundamentals. And that's ultimately where we need to get to, is just back to fundamentals.
Hello, everyone. Hope you're doing well. If you can please click the link in the description below and just follow us on Instagram and follow us on X. It'll be much appreciated. We're putting out new content every single day. We're doing financial content, silver and gold, and political content. Just please take a second, click the description below of this YouTube video, follow us on X, and follow us on Instagram. Thank you so
Fundamentals.
much. Where are you putting your money right now, or where are you guys looking to allocating your money?
So it's kind of a combination. I'm still a firm believer in the tech story. Tech is the wave of the future. I know I've said that multiple times on this channel,
Yeah.
but I want to remain invested in tech. In the near term, we're going to have that volatility. So we're pairing that large cap growth with value tilted, and specifically dividend payers, because the cash that investors receive from dividends, as well as the valuations, if we're concerned about multiples like PE ratios, then value would offer, I don't want to call it a safe haven, but I would call it, it would help dampen some of the volatility that we're experiencing in large cap growth.
hmm Right now, a lot of people have been talking about, the interest rates and what's happening next. Are they going to lower interest rates? Are they going to keep it steady? Trump is pushing to have interest rates lower. You mentioned earlier in this episode about inflation. Inflation is still a pressing issue. So, what do you think the Fed is going to do? What happens if they do decide to lower interest rates, which they have hinted at lowering them? What's the next step for the markets, for the US dollar, everything?
So I think the Fed's going to be on hold, at
Really?
least in the near term. Yeah. So January, I don't think we'll get a rate cut. We may get one middle of the year, but it depends on how the US economy unfolds. Because if we look back at the numbers that the Fed is targeting, we still have solid economic growth. Employment, even though unemployment rate has ticked up a little bit, we're still at historic lows in terms of the overall unemployment rate. And with inflation, they have to be mindful of that inflation rate not coming back down to their 2% target. So the markets right now have essentially priced in maybe one rate cut in 2026 and another one in 2027, but those probabilities of a rate cut are fluctuating pretty rapidly. The other thing that's kind of an issue is that we had the government shutdown last year. And so, as an example for today, we just got October's inflation report and November's inflation report all at once. And so, I know a lot of investors and economists and strategists have been trying to piecemeal or piece together using other data sources to try to get a true sense of where inflation is. But if we look at the Fed's mandate, the economy would appear to be humming along pretty well, with the exception of we still have that persistent inflation. So I don't think that they'll cut rates in the near term.
Do
Hi, I'm Michael Piccioni, founder and president of Can-Am Bullion. At Can-Am Bullion, we are more than just a precious metals dealer. We are your trusted partner in securing your financial future. As an authorized dealer of the Royal Canadian Mint, we take pride in offering only the highest quality gold and silver products. And with our best price guarantee, you can trust that you're getting the most value for your investment. We offer free, no obligation consultations with one of our precious metals experts. Our commitment to excellence has earned us a 5-star Google rating, a shopper approved seal of approval, and an A+ rating from the Better Business Bureau. These accolades reflect our dedication to transparency, integrity, and exceptional customer service. Are you ready to take the first step towards financial security? Contact Can-Am Bullion today for your free consultation. Let us help you build a brighter future with the power of precious metals.
Do you think the United States, David, is kind of fighting for their superpower status? For the longest time in the past 10, 15, 20 years, United States are going and China are going head to head for that superpower status to be number one. Obviously, United States is number one, but China is creeping up right behind it. And then, do you think that's why? The United States is trying to capture the whole Western Hemisphere, like go after Venezuela. You'll have that oil supply. Go after Greenland. You'll have the critical metals and the Arctic, influence there. What is your thoughts on the future of the United States and their global dominance?
That's a great question, and I think what you stated is the overarching plan is to isolate China and Russia from the Western Hemisphere. So if we think about the actions in Venezuela specifically, yes, it opens up those oil markets, and that's a boom to oil refiners, especially in the Gulf region. It also eliminates, or I shouldn't say eliminates, it reduces the risk of a geopolitical risk of having a country um, that is cozy with Russia and China, that's
Right.
really close to our borders. But if we think about like the Panama Canal, we think about Venezuela, we think about Greenland, essentially what's going to happen is that for China to ship products, they're going to have to go through Asia versus coming over the Western hemisphere and shipping through like the Panama Canal and so on. So
Right.
I think that's right. I think it is. I've heard somebody somebody say the Don Roe doctrine, is a homage to the Monroe Doctrine,
Right,
and I
right.
think that's essentially what the administration is trying to accomplish. And in Greenland is, again, from a geopolitical perspective, it's so close to the United States, but also to your point, it's mineral rich. And so there's a lot of opportunities there in terms of getting access to those metals and materials that we need to continue to build out the U.S. economy and the AI infrastructure.
hmm for the people watching you for the first time on this channel or for our new viewers, what would be your advice or guidance for them, starting 2026, whether they're in an investment portfolio or whether they're just starting, what would your advice be for them?
Specifically for 2026, and this has kind of been my mantra that I've been sort of preaching, if you will, is we're going to see these headlines and we're going to see market volatility due to these headlines. What I would caution investors is to stay patient, stay invested, because like we saw over this last week, we saw the market sell off pretty dramatically, but then within 2 days, we're above those levels.
Right.
So from a market timing perspective, it's very difficult for individual investors to try to time the market in general. But now that we have headline risk, it's going to be even more difficult because you have to take the initial headline, think about the impact, and then almost wait and see what the end result is going to be before making any knee-jerk reactions.
No, you absolutely nailed it, David. It's a pretty crazy time we're living in, especially with all the excitement and all the craziness that's happened in 2025. Going into 2026, on our side we're staying optimistic, but of course we are being prepared for, or we are preparing for any of the uncertainties that's coming our way. But David, before you go, I really want people to connect with you. I'm going to put your links in the description below so they can follow you. But where can they follow your work?
Yes. So we're at TrajanWealth.com, and then we're across all social media platforms. And yeah, please follow us and for updates just like this, as well as many others. And again, I would just reiterate, stay calm, stay diversified, stay invested. I'm still a firm believer in American exceptionalism and that we're going to continue to grow. And I think that within all the noise, there's going to be opportunities for investors.
Yeah, no, absolutely. Everyone watching this, please go follow Trajan Wealth, follow their social media links. I'll put it in the description below. But David, thank you so much for coming down. It's nice talking to you every time, getting your insights and what you think is going to happen in 2026 in the markets. But yeah, thank you so much for coming down. As markets develop, love to have you back on soon.
Thank you, Ivan. I appreciate you.
Take care.
Thank you for watching. Be sure to like and subscribe and comment to get more content just like this.